Hi, this is Brett, and welcome to the Trading's House. This is another chart breakdown video for Trade Therapy. Today is Monday, June 23rd. We are talking about Cathie Wood and her ARKK Innovation Fund. ARKK was our Clarity Spotlight last week. Those of you that have been following our work know that this has been a long time coming. We've been covering this accumulation base going on for well over a year, and it's finally showing signs that the next markup campaign is underway. So let's get right to it and walk through the charts. This is from March of this year, the last time we covered ARKK. The breakout was just beginning. Price had just jumped across the creek. We saw a Wyckoff Creek concept here. Price had just jumped over it and backed up to it. And what we were looking for here was whether or not institutional buyers would step in and defend this move. Market sentiment was still very mixed. So we were watching to see if institutions would come in here with some volume and support this back up to the edge of the creek here. There were no signs of failure yet, but volume was still pretty light. And we cautioned that a shakeout wasn't off the table. And if we jump over to our annotated chart from this week, we'll see that a shakeout did come in a just elevator drop right here in April. The ARKK fell back into the creek. Back tested its volume. This is its all-time volume shelf right here. This dotted line is its point of control. And you can see that this falling back into the creek tested the volume shelf here at 38. And what's important isn't that this happened, and I'll explain why this happened in a moment, but what's important is what happened next. This move down here was absorbed by volume. It cleared out all of the retail traders that had joined in for this trade right here from March to August, and then price violently and rapidly jumping back out from this low supported by strong volume. All of the major averages are now starting to turn up and have constricted right here, forming very strong support. This is entering a microwave 3 of a larger 1, 2, 3 structure, which is part of an even larger 1, 2, and then 3 going off the chart here. We believe this is probably the most violent period of price acceleration that we may be seeing in ARKK right now. The psychology of an Elliott wave 3, we covered that extensively in Clarity this week. The psychology of it is institutions want to take all of the retail traders out of here. They don't want them selling into them as they push price up into their next profit-taking zone, which is the 618-786. Fibonacci retracements here at 83 and 111, which also coincides with this shelf right here that they'll need to work through. So they don't want these people selling into them, so they take them out of the trade quickly and then turn around and rapidly move price back up to their profit-taking range. So this is a sentiment trap right here. They want to scare everybody out of this trade, all of the people that have been holding for this long, or all of the people that had come in thinking that they had perfectly timed this breakout. They want to take them out and get them out of the way so they can advance up to their profit-taking zone without having to absorb all of that unwanted supply. That's the psychology of an Elliott wave 3. To gather further evidence of this move and confirm our strategy, we took a look this week at TARK, which is Traders 2X Long Innovation Fund. We wanted to see similar structure and similar price behavior. And what we see is this multi-year accumulation phase that had developed in TARK. You see a sharp pullback down here, setting a Wyckoff spring, undercutting all of this entire range. What's interesting about this is that it's a low volume failed sell-off, which by definition is what a Wyckoff spring is. That's when demand steps in, the demand greater than supply conditions kick in, and that's why price rapidly leaves that range and gets out. But what's interesting about this is that you don't see volume coming in at the bottom. What that tells us is that institutions have already accumulated their position here, that this wasn't about taking out supply and accumulating a larger position. This was about creating negative sentiment for the growth space so that price could turn around and then move freely back up out of this range. Very sophisticated play. We often see it at the end of these accumulation and reaccumulation structures. In Clarity and in our coverage, we've been talking about this and teaching our members to expect this towards the end of these accumulation ranges. We've been talking about this for quite some time. Great to see it actually coming together. This spring now has been set. Let's zoom into ARKK's daily. If we take a closer look at this daily chart, this is what strength looks like. We've got rising volumes coming out, supporting this breakout, pushing it up through overhead supply and getting up to the top of this range right here. We see clean higher highs, higher lows. All of the moving averages are now in sequential order and turning up. We jump over to a live chart right here. We can see that we have extended above this market structure top right here today. We are seeing RSI getting up into the overbought area. So we're not ruling out a back test of this green moving average right here. So 21 day exponential moving average. The gold one is the 30-day simple moving average. We should expect to see some sort of a reset here, probably to this range right in here, a back test of those moving averages, just to let momentum cool off, let profit be taken out of this move right here, and then set up for the next higher move. If you're still wondering whether or not this move is for real, if we jump over to the chart that we started with this week, which was our ARKK by SPY, a ratio chart. This is ARKK comparing the strength of basically the growth sector to mega cap space, the S&P 500. You see this huge accumulation range that has built over the past 3 years, going on 3.5 years now. Similar to the accumulation range that had been previously built, you see a Wyckoff spring developed underneath that range to take all of the retail traders out of this before this markup or this impulsive wave structure started. And we see a Wyckoff spring set underneath this range. We see the beginnings of wave 1, 2, and then potentially the beginnings of wave 3 starting right here. So if we looked at it comparatively speaking, we'd really be right about in this area right here in 2017. And just like then, retail investors were doubting every step. We're doubting whether or not this move was for real, just like people are doubting whether or not this move in ARKK is for real. That's why we constantly are reminding our members, don't let headlines distract you. Stick with the data, read clarity coverage. If you read our content, we'll teach you how to read these charts. We'll teach you how to recognize these technical aspects of what's going on in your holdings. That's all we've got for ARKK this week. We'll see you next week.